Hey guys, after some relentless downside action in the crypto space, the stock market, and even oil, we may have some reason to be optimistic. This is an update on EOS, which has been giving us some bullish signs over the past several days, along with other cryptos and the stock market. So we're going to go over that and how things are looking in the stock market as well. And if you are interested in these charts, they are posted in the description below. So check out the links there. But this is our 30-minute chart in EOS. And that's right. I got a lot of green on the screen at the moment, although we've had a bit of a down day in certain areas, certain cryptos. This is basically the looking like possibly the end of our crash. In our last update, we're looking for some downside action potentially, and we got it. You'll remember I had an aqua colored bullish pattern that was taken off. We never did get through our confirmation box up here about between 143 and 149. And instead, our 1-2-1-2 setup that I highlighted in the last update was actually indicative of some downside action. And downside action we have gotten. I think I had a lower target in the 90-cent range. We actually made all the way down to about 81, 82 cents, right in that range, which is about what it looked like our downside was going to be on the big picture chart. On the small picture, however, we did extend a bit lower than expected. So that entire rally that we saw before was very likely a fourth wave pullback overall. And I'm actually going to adjust this to give us more clarity on what happened. And our low is the actual downside, and that spike down May 12th was the actual third wave. So what we've gotten going on in the short-term picture is, again, anything but a slam dunk, but some positive action. I'm actually going to zoom up a little bit more just to give you guys a bit more of a detailed overlook of what this looks like. So that was our bottom, again, officially about 81.7 cents, something like that. We got 5 waves up, 3-wave correction down, and then a 5-wave impulse up for the third wave, nice fourth wave, and then potentially a leading diagonal for the 5th wave. Maybe you could count that as a 1, 2, 3, 4, 5, or something like that, maybe down here, or the whole thing could be a leading diagonal, but it does fit standard Fibonacci proportions. We got our third wave that's topped right between the 1.32 and 1.61 extension. That's textbook. And our 5th wave got right between the 1.764 and the 2.0 extensions. So those are textbook ratios, textbook extensions. And our 4th wave also held support. So it held the 0.764 extension. I know I'm nerding out here with the numbers, but I can't help it because everything did fit the proportions right. So I'm pretty convinced that this is a 5-wave impulse up, and therefore this subsequent pullback is very likely a second wave. So you'll see that this is now counting as a larger first wave, with this potentially being a second wave. What will it take me to get excited? Well, first we need to complete this correction, which may be done. We've actually gone down sufficiently deep for this to be all of the second wave. So that very well could be the bottom, but I'm going to leave this where it is because we could go a bit lower. As long as we don't break the low that we hit at 81.6 cents, 81.7 cents, we'll be fine. And then we need to break through our new pivot box. So it's about $1. So $1 to $1.03. If we break through that, then look out. We're going to probably blast straight up. Our third wave could take us past $1.14. And then that's where we'll have another test to see what happens next. After we get our third wave up, we need to see a corrective consolidation for our 4th wave. That will very likely be pretty sideways. And then a final 5th wave up. If we get that larger 5-wave impulse pattern up, that'll make me very confident that we're done with the downside, and the subsequent pullback may be a really good buying opportunity. So we must see all this happen. Otherwise, this could actually be an A wave up, B wave down. And if we got up there, that could be a C wave up, which would mean we have further lows to hit. Now, this isn't the only coin where things were looking bullish. I know I did a chain link update yesterday, and here too, it was looking pretty solid. I think I was looking for a higher high for a 5th wave, although depending on how you count this could be a 5-wave impulse. It doesn't look as clean as Bitcoin and Ethereum do, the OG cryptos. So I have the same pattern showing here. The ratios, the fibs, everything works out pretty well. Everything pulled back as expected to the right support levels. Although our 4th wave is a bit deeper than standard, we did make to the 2.0 extension, and you could easily count this as 5 up and 3 waves down. Even the MACD divergences, everything works out. We had the highest divergence there, the highest stretch. And finally, Ethereum, same thing. I don't have it labeled. I was looking at this as possibly being a 4th wave triangle, but it could be an ending diagonal 5th wave with our 2nd wave in progress at the moment. So a lot of action that is optimistic, looking bullish. Now, big picture, as we mentioned in our last update or two, I've shifted. Well, we broke our major March 2020 support seemingly ages ago, and I put this new green primary pattern as our current primary. So when we look at the MACD, before I move on to that, still holding divergence. This I went over last time, is assuming that this top at the end of 2018, I'm sorry, spring of 2018 was actually a major third wave, which would closer mimic what we see. It would resemble what we see in Bitcoin, Ethereum, and Dash, among other older cryptocurrencies. And we assume a 38.2% retrace off of that. That gives us a bit more of a better estimate as to where our upside could go. So now I've adjusted this. I'll have to just do some finagling later. I just heard a train horn out there, got distracted there. Third wave, this would be the major fourth wave bottom, which means we have one more rally to go. This is actually almost universal across just about every market segment, including the energy field, commodities, the stock market. Everything is signaling that we have one more rally before we hit the ultimate everything top, which would be a major event. And it may come sooner than expected, just because we went so deep on this pullback that doesn't look like it's the fourth of a third. This looks like the fourth wave of our bigger cycle. So what are we expecting next? Nothing really has changed. We again did follow through on a lower low. I think I had a note here. May see a lower low, 85 cents or lower. That's exactly what happened. We hit again 81.7 cents, if I recall correctly, and we should see some bullish action. So this is a good start on as to what we can see going up. We have a lot of ground to make back up. So we expect this to take impulsive form, assuming that this will be an impulse. This rally back here looks impulsive to me. We're not sure if that is actually the bottom of the second wave. Maybe it is, maybe it isn't, but that would be my expectation. There's a chance we see more of an ending diagonal kind of thing, which would still be a 5-wave pattern. You probably just see a higher first wave, slightly lower third wave, and a deeper fourth wave pullback, something like that. That is certainly possible. I expect that to happen in Bitcoin and Ethereum, actually. And that often happens when your third wave goes up too high, too fast. And well, your fifth wave doesn't have as much ground to cover. So that is my expectation. You can kind of see this, my Ethereum chart, 1, 2, 3, 4, 5, could be or may not be an ending diagonal. There's a good chance it will be. I don't know if I have it more clearly shown here. Possibly, yeah, in Bitcoin too. So that is what our expectations are in EOS. And short term, what are we looking for next? Again, we need to complete this pullback correctively. We don't want to have an impulsive downside setup and crash to the floor, because that would immediately invalidate what we have so far. If we get this correction, let's assume we get a 61.8% retrace, which is pretty standard. Again, we could see this thing take us to $1.20 to $1.26 in a larger impulse. Now, in the big picture, that is, it'll at least be noticeable. It looks better than what we see right now. And that's just about where this red line is. So that is a key resistance. So getting an impulsive rally through that resistance would be a very good sign. And looking at this bigger picture, if we do get a rally up to that red line, that's a very good chance that that would be the first wave of a larger first wave. And that could top maybe the end of summer. You never know. Let's see how this thing materializes. Again, we've been having a lot of common inflection points between cryptos and the stock market, when also demonstrating the Dow Jones to represent the stock market for us. We clearly have 5 waves up. You got a 1, 2, 3, 4, 5, very deep fourth wave retrace, almost overlap the first wave. So you could count this as a diagonal up or an impulse. Technically, by the book, it still is an impulse. All the fib extensions that were hit were standard, except for the unusually deep fourth wave. So if you look at futures, it looks like a bleeding diagonal. If you look at the S&P 500, it actually does look like a pretty standard looking impulse, which I'm not going to dig into at the moment, but we have ourselves a good setup. Let's see if we can hold together. If not, again, be patient, because we may see a nominally lower low. The same persists in the stock market as well. So if you'd like to keep getting updates, don't forget to subscribe. Until next time, thank you for watching and happy trading.